Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. President Trump says new Iran negotiations will begin later Monday after calling off planned strikes. The move follows appeals from Gulf allies, including Saudi Arabia, to pursue diplomacy. Oil prices tumble as much as 7% on optimism the United States and Iran will reach a deal to reopen the Strait of Hormuz. And the yen climbs sharply after Japan and the U.S. signal they'll intervene again if the currency needs it. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Another breakthrough in the Middle East. But before we get into that, let's take a quick look at where markets are sitting this morning. Positive picture for the United States, about 0.6 higher for U.S. futures. We're also looking at NASDAQ 100 that is also tilting higher after a positive close on Friday. AI very much in the game still, and that is exactly what Asian equities are reflecting this morning. Although on the downside, we're seeing Asian equities 0.6 lower this morning, weighed down by the Kospi. The Nikkei 225 is also down. Topics is also down. This is as chip makers weigh on the overall gauge. But I spoke about it in the headlines, and this is something we're keeping a close eye on. The yen is at around 156, 157 versus the U.S. dollar, much weaker than levels we had seen in recent months. This is something that our markets team had put out in the last 2 days of the last week. The yen had reversed more than 2 months of losses, and this is after we reported a suspected intervention. It was confirmed later on. There was a usage of a combination of direct purchases in the market, calls by officials to banks that deal in the currency, and also jawboning by both Besant and Katayama, the finance minister in Japan. So we're keeping an eye on a slew of risk assets in Asia this morning. The story for us, yet again, in the region, Brent crude prices $83 on the barrel. It opened 7% lower after President Trump's remarks, a reversal for him. He said an attack that was going to be the biggest since World War II. And then he said, actually, talks are set to recommence between the United States and Iran later on Monday. So we're seeing Brent crude 5% lower this morning. We'll unpack that conversation later on the show. And then we're also keeping an eye on the yield on the 10-year notes in the United States. 4 basis points lower. The yields are dropping across the curve on positive geopolitical progress. We're seeing the 10-year notes dropping, the yield on those dropping, slipping from the highest close in more than a year in the earlier session. We're also keeping an eye out on gold that is climbing slightly. The dollar weakening against most of its G10 peers. But for a deeper dive on what is happening in Asian markets this morning, we've got Winnie Su again in Hong Kong for us. Winnie, welcome back. What do you have for us?
Yeah, good morning, Abir. As you just mentioned, a very exciting day for the yen, or I should say a very exciting past few days. Now, in terms of today's move, we did see the yen strengthening by as much as 1.4% earlier today, and that is on some speculation of whether there was another intervention or potentially just investors getting a bit jittery ahead of a potential intervention to come, given those talks between the U.S. and Japan. Now, when you look at really the past 3 days, it has just been very sharp moves of the yen, followed by the first one that we saw on Thursday, that intervention as the first wave, followed by what we saw on Tuesday, that very first U.S.-Japan coordinated yen intervention in 15 years. So what it goes to show to you about markets is that, one, both the U.S. and Japan thinks that the weakness of the yen has gone too far. Second, that it really is showing you how they are very determined to provide a support for the Japanese yen. And that is why it's making it so difficult for traders to bet against that movement in the yen. When it comes to that impact on the broader market, we are seeing the likes of Topics Index here well, this is the year-to-date moves, but when it comes to today's move, in fact, we did see the pressure on the broader Japanese stocks, and that is because the strengthening of the yen pressuring Japanese stocks that has a heavy weight on the exporters, and the exporters, the likes of Toyota, for example, are really dragging the declines today. But on the bright side, you are looking at the likes of Nitori, which is a very domestic demand-driven name. Representing the names that are heavily relying on the domestic demand, and that is really benefiting today, given that a stronger currency does help the economy of Japan. Now, when it comes to the yield space, we also see that the two-year yield spiking upwards as well, because now investors expect the Bank of Japan to potentially raise rates faster than expected, and for now, the expectation for the October hike is at 90%. Back to you, Odier.
All right, Winnie Su in Hong Kong with that market update. She'll be back with us in about 30 minutes. Now, let's return to the geopolitical story in the Middle East. Oil prices are slumping as President Donald Trump says a fresh round of peace talks will start later today. He also suggested that a deal on reopening the Strait of Hormuz may be close. His comments come after he called off a planned attack on Iran, partly due to pleas from U.S. allies in the Middle East, including Saudi Arabia.
What we're doing is we're talking to them in the form of a negotiation. It begins tomorrow afternoon, and we'll see if it's true. I'd love to do that, save a lot of lives, save a lot of unnecessary power, to be honest with you. It would take many, many years to ever build it back. If it could, I don't think it would be even buildable back. So we had an attack that would be the biggest attack since World War II.
For more, we're now bringing in Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Stuart, we've been here before multiple times over the past few months. What makes this time around different, or is it different?
It's quite similar, although I will say there is one slightly different thing this time, which is that Iran and Oman seem to be making progress on some sort of mechanism for controlling Hormuz, whether that's governing it or coming up with a new route through it or demining it, or we don't quite know. If that element of it can be fixed and you can get some sort of system in place where shipping can go through Hormuz again, I think that removes probably the biggest obstacle we have to those wider talks around the nuclear file and so on and so forth. Like, there is a template for nuclear. Hormuz is by far the most pressing problem.
And speaking of it, what does the movement there look at this time? And then what's also probably different this time around is we're seeing other risks to other waterways in the region. So when it comes to movement in the Strait of Hormuz per se, what does it look like at the time being?
Very sporadic. I mean, it's largely where it's been most of the time since the end of February, which is a few tankers are getting through. Very hard to detect them until they're quite a long way off, but it's a trickle. I mean, it really is a trickle. And in terms of the global oil market, the context here is we're something like 400 to 600 million barrels lower on global inventories than we were at the end of February. It has an awful long ways to go before we get back up to so-called normal levels.
And then OPEC also raised output slightly yesterday, 188 barrels.
Yeah.
Does that move the needle?
No. I mean, it's entirely theoretical because basically the ones with the spare capacity are struggling to get their barrels out. What it does do is it sets the stage potentially. If you can fix Hormuz, then that gives them some headroom to accelerate that production and accelerate those exports, and we can get back to a normal situation at a much faster speed. So it makes sense. You know, it's not to downplay it, but does it fix anything this week? Absolutely not.
Absolutely not, then. Stuart, thank you, as always, for your time. Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Now let's carry on with this conversation. Joining us now is Eyre, distinguished diplomatic fellow at the Middle East Institute and former senior U.S. diplomat. Alan, good to have you on this morning at a time where we just have a breakthrough from President Trump. I was taking a look at one of your latest pieces, and you say this, as a quote, "It is now clear that the U.S. is sinking into the quagmire of its war with Iran with no clear idea of how to get out." Given where things are at the moment, Alan, how does the U.S. actually get out of this with as little losses as possible?
Well, Abir, as I wrote in the article, I think the U.S. has to cut its losses. There hasn't been a breakthrough. in any way. This is just the usual cycle that President Trump is engaged in of escalation or threatening to escalate, then de-escalating. I think, as your previous guest said, the best we can hope for is Oman and Iran finding some sort of agreement on the Strait of Hormuz, the future control of the Strait of Hormuz. Unfortunately, I think, at least in the short term, that will involve at least partial Iranian control. So that's a best case, and that's still a long way off.
And Alan, Stewart was also speaking about how the Strait of Hormuz has taken the front, and center part of those negotiations. And it does feel like over the past couple of months, it feels like the Strait of Hormuz is the priority for everyone. Do you think that other components, namely the nuclear component, have taken a back seat? And how does the U.S. go back into that conversation, which was President Trump's main goal in all of this?
Well, you're quite right, Abir. The goal of the highest possible goal for the Trump administration now is to get the Strait of Hormuz back to where it was before they attacked Iran, 100 to 130 ships going through a day. And that's, months and months off, best case. As for the nuclear issue, that can has been kicked so far down the road, the U.S. will have taken an off-ramp from this whole mess before we even reach it. It is highly unlikely, in my opinion, there will ever be any sort of nuclear agreement that puts effective constraints on Iran's nuclear program. Iran and the U.S. have zero trust in each other. They're not negotiating directly. When we were doing it in the Obama administration, a nuclear deal took 5 years. And for 2 of those years, both sides were earnest and really focused on getting an agreement. So I think the odds of the Trump administration seeking that is long.
And Alan, that is from the U.S. side. From Iran's side, at this point, 5 months or so into the war, a little bit more, do you think they're actually less incentivized to come to the table and discuss nuclear?
Oh, they're not. Yeah, they'll come to discuss, but they'll discuss it the way they've always done. Their red lines haven't changed. They're not going to give up indigenous enrichment of uranium on Iranian soil. They're willing to suspend their program, which is no big deal because it's going to take years to build it back up anyway, because we blew it up last year in last year's war. And they're not going to give over all their highly enriched uranium, all 444 kilograms. So they're willing to talk, but they're not going to change their red lines just because the U.S. has dropped so much ordnance on them. And furthermore, the current Iranian government is more hardline, more anti-U.S., and less likely to trust the United States. So a nuclear deal is even harder.
Okay, so let's assume the talks that President Trump had touted do go on today, that there is progress when it comes to those talks, although we've been here multiple times before over the past few months. What are the potential spoilers this time around? Is it the proxies in the region, Israel, something else?
Well, I don't know what President Trump's talking about when he says talks will go on. Direct talks have never happened. If he's saying that messages will continue to be passed between the U.S. side and the Iranian side by the Qataris or the Pakistanis or the Egyptians or the Turks or whomever, that could well be the case, but that's been ongoing. So like so much of what President Trump has said about this war, you really have to take it with a grain of salt. So again, if there's more clarity as to what sort of talks are going to resume tomorrow, maybe I'll change my opinion. But I think here again, I think the president's just trying to jawbone the market.
And just finally, Alan, how sustainable is a diplomatic resolute or the track of diplomacy when Israel has repeatedly made it clear that it reserves the right to respond militarily if the nuclear component in Iran is not answered for?
Well, I think, again, the U.S. has not been willing to and is perhaps unable to engage in serious and sustained diplomacy with Iran. It's outsourced it to various countries, like Oman right now, regarding the Strait of Hormuz. But you're quite right. Israel is still keenly focused on eliminating the Islamic Republic of Iran. Prime Minister Netanyahu is heading for an election soon, and if he's forced to stand down on Iran and on Hezbollah and Lebanon, he's going to lose the election, he feels, and that means possibly jail time. So Israel is chomping at the bit to resume hostilities against Iran and is looking for an excuse to do so. So you're quite right in flagging that, Abir.
Alan, it's always a pleasure to speak to you, but we'll have to leave it there today. Alan Eyre, Distinguished Diplomatic Fellow at the Middle East Institute and former senior U.S. diplomat. Now, coming up, the Fed held rates steady last week, but three dissents are keeping the inflation debate alive. We'll speak with Lombard Odier's Samy Chaar next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Bloomberg has learned that Fed Chair Kevin Warsh has raised the possibility of changing the frequency of the U.S. Central Bank's regular policy meetings. One idea Warsh floated is for Fed policymakers to meet 6 times a year to decide on interest rates and other monetary policy issues, and twice a year for discussion of substantive economic topics. Joining me now to discuss this and more is Samy Chaar, Lombard Odier's chief economist and Switzerland CIO. Samy, good to have you on with us this morning. I want to start with the Fed, that intro that we just alluded to. And the last meeting, really, 3 dissents. Was it widely expected, first of all? I know your base case scenario is for a hold for the time being under the current economic data, but what would it take for Warsh to change course?
Well, we haven't heard much from Warsh when it comes to his framework. So there is obviously, for people like us, a bit of frustration. But one thing that we've heard is that he would be sensitive to trend in underlying inflation. So what we need, what people like us who do not expect a hiking cycle from here need, is improvement in inflation data in the coming months. We basically need to be a bit lucky here and to have inflation and its composition to be favorable every month through the end of the year. If you get a couple of reports that are hotter than expected, then of course that will be the green line for Warsh to hike.
And so, Samy, given the recent volatility in energy markets, I mean, they've been volatile since the beginning of the year, but last month we saw Brent prices up about 20% or so. Do you think that's going to have an impact on the upcoming economic data releases out of the U.S., possibly changing the way Warsh thinks about this whole thing, despite the very minimal disclosures we've gotten out of him?
Well, Odier, it cannot be only about energy. I think he was relatively adamant about that. It has to be about inflation broadening. It has to be about underlying inflation, so not only the energy component. Let's hope, obviously, that the technical elements out of Iran and Hormuz go the right way and that we continue to have an oil price that deflates somewhat from the levels we've seen so far. But very clearly, it has to be about other things. It has to be about the inflation broadening. It has to be about, labor markets becoming tighter. So far, I would say it's been in the right direction. We haven't seen inflation broadening. So we would need to see that material change for the board and Warsh in particular to change his mind.
Samy, let me move on to markets. We've seen robust earnings coming out of the United States, particularly so far. It does look like investors are looking beyond that. And I want to focus in on one sector, particularly that's been seeing a lot of weakness recently, chip makers. Do you think the story is over for that? Or do you think that we're at a place where investors could look at entry opportunities?
Quite the contrary, indeed. We think this is an entry opportunity. We're far from thinking that this cycle in technology, in AI, in chip makers, in data centers is over. We're actually seeing a cycle that is, in my view, still relatively young. We haven't gone through the leveraging cycle yet. It has just begun. So fundamentals are favorable. There is still demand. Demand fills order books. Order books leads to profits, and this is what we're seeing currently. Of course, we're trying to monitor all the red flags that could indicate that this cycle is about to die of exhaustion. But for now, nothing seems to indicate that. The profit cycle is ongoing, the capex cycle is ongoing, the leverage level, the quality of the balance sheet and P&Ls is still favorable. So no reason to see that ending straight away.
So do you prefer the tech story in Asia or the United States, given the current fundamentals?
Well, I guess both. But we are overweight Asia, so basically it's the same story. It's the tech story, it's the tech cycle, but there is one that is a little bit cheaper than the other one, and that's the Asian one. So it's why we would favor exposure to Asia. But again, it's the same story. It's just the price that changes.
All right, Samy, we're going to have to leave it there. Samy Chaar, Lombard, Odier's chief economist and CIO of Switzerland. Thank you, as always. Now, still ahead, oil prices tumble as President Trump calls off an attack on Iran. We'll bring you the latest next. This is Bloomberg. Sources say Jefferies-run fund Point Bonita Capital is reviewing its exposure to commodities trader Radiant World. It comes amid concerns about invalid invoices and other documents Radiant World allegedly provided to banks. Radiant World denies the allegations, and the fund's exposure is set to now be worth less than $300 million. The review comes as major firms, including Vital and Cargill, have stopped trading with Radiant World. AstraZeneca is set to be exploring an acquisition of Bristol-Myers Squibb, a mega deal that would create one of the world's largest drug makers. Discussions are set to be at an early stage, and if completed, the takeover would significantly expand AstraZeneca's presence in the U.S. market. And Chinese AI startup DeepSeek has released the official version of its V4 Flash model, introducing enhanced autonomous capabilities and further reducing API costs. The release underscores a rapidly escalating arms race among Chinese AI developers as they slash prices to capture market share and challenge Western leaders. Now, before we head to the break, let's just take a quick look at where equity benchmarks are sitting. All in the green. S&P futures 6/10, Nasdaq 100 about 1% higher, Dow Jones, Euro Stoxx 50 futures also gaining. Brent crude prices are seeing a massive loss today as those stocks, according to President Trump, are set to begin later today on Monday. Now, coming up, traders are on the alert as the US and Japan warn of further action to lift the yen. More details on that story next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. President Trump says new Iran negotiations will begin later Monday after calling off planned strikes. The move follows appeals from Gulf allies, including Saudi Arabia, to pursue diplomacy. And oil prices tumble as much as 7% on optimism the U.S. and Iran will reach a deal to reopen the Strait of Hormuz. And the yen climbs sharply after Japan and the U.S. say they'll intervene again if the currency needs it. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. We've spoken geopolitics, we've spoken yen. We are going to now take a quick look, another one, at where markets are sitting at half past. You're still seeing S&P futures turning higher, 0.6 at this point now. Nasdaq 100 futures are also about 1% higher. We took a look at those before the break. The SOX index closed flat on Friday. Now, it did have a pretty terrible month as those chip makers weigh on overall gauges. And this is the story this morning in Asian equities. MSCI Asia Pacific, we're seeing it 0.4 lower this morning. We're seeing weaknesses in the Kospi, in the TOPEX in also the Nikkei 225. The AI story is wobbly at best, but we're also keeping an eye on the yen. We spoke about it. We'll speak about it again. It is a massive story. It is between 156 and 157 against the dollar as of this morning. Our markets teams had put out this fascinating statistic saying that in the last 2 days of the end of last week, the yen reversed more than 2 months of loss. And this is due to multiple reasons. One, we're seeing the usage of a combination of direct purchases in the market, calls by officials as well to banks that deal in the currency, but also jaw boning by both Besant and the finance minister of Japan, Katayama. So we're keeping a close eye on the yen and further interventions, whether those will actually be meaningful or not going forward. In the region, it's Brent crude for us, 5% lower, $83 on the barrel. Those negotiations are set to happen today or recommence today, according to President Trump. We don't know what shape they will take, but we know from the foreign minister, Abbas Araghchi of Iran, that negotiations between Iran and Oman, at the very least, are in final stages to open the Strait of Hormuz, or the new route in the Strait of Hormuz. We're keeping an eye on that and what it means for energy flows. And then finally, the U.S. 10-year yield is dropping this morning, 4 basis points. The yields are dropping really across the curve on those positive geopolitical headlines. But for more on what is happening in Asian markets this morning and how they've developed over the past half an hour, we've got Winnie Su in Hong Kong for us. Winnie.
Yeah, good morning, Abir. Well, we are seeing Asian stocks under a bit of pressure today. Now, oil prices falling is supposed to be good for sentiment, but we're really seeing these markets in our region moving on lots of idiosyncratic themes, with the Kospi here leading declines down almost 5% after having risen for 18% on Friday. So a bit of a reversal there after foreign investors who were buyers on Friday turned into sellers today. Now, the bright spot, in fact, in our region today is the tech stocks in Hong Kong, here up 0.7%, with gains being led by Alibaba as the companies rolled out this new model, the Qwen 3.5 Max, with its capability to really be able to rival its peers like Anthropic's Fable. Now, flip the board, we also take a look at Japan cross asset, because as you mentioned, yen is really front and center in the markets today, with the Japanese yen here strengthening as much as 1.4% earlier today on speculation whether there was another round of intervention or just investors getting a bit jittery ahead of potential further intervention. Now, this is overall weighing on the Japanese stocks, which do see a lot of exporters in its gauge. That's why we are seeing here the transport equipment subsector leading declines down more than 3%. Now, overall, when it comes to the cross-asset picture, we are also seeing 2-year yield here 5 basis point higher, as investors now expect the Bank of Japan to potentially move faster in terms of its rate hikes. And for now, we are pricing in about 90% of chance for an October hike. Back to you, Abir.
All right, Winnie Su in Hong Kong for us with all those latest market moves. Now, sticking with the yen, the U.S. and Japan have warned of further coordinated action after confirming their first joint intervention in 15 years in a move to lift the yen from a near 4-decade low. The threat of renewed action now puts traders on high alert as they watch out for any sharp moves within the foreign exchange market. So to discuss all of this, let's get more from Bloomberg Tokyo economy and government reporter Erika Yokoyama. Erika, good to have you with us this morning. So Japan did coordinate with the United States on Friday's currency intervention. What is the significance of this move?
Right. As you said, first of all, this is the first joint currency intervention in 15 years. It's quite rare, given that U.S. is generally not fond of market intervention, right? And U.S. participation gives Japan much greater firepower to combat currency weakness. This is no longer just Tokyo acting alone. That sends a much stronger signal to markets. But at the same time, there are a couple key questions to watch. We don't know yet whether Washington will ask for something in return for helping Tokyo. And the US stance on the Bank of Japan's monetary policy is also a huge question. As you know, Bessent has previously indicated that he prefers the BOJ's rate hike to address the currency issues. So that could influence the expectation ahead of the BOJ September and October hike. And of course, we have to see how long the intervention impact will last.
Yeah. And Erica, so are we expecting more action from authorities, and how meaningful would that be?
Yes, I would say so. Both Bessent and Katayama explicitly said that they would not hesitate to conduct further intervention, joint intervention if needed. And Japan's top currency official Mimura also said the real work should start now, adding that Tokyo remains in close contact with Washington. So we already saw likely action this morning in Tokyo, with the yen briefly strengthening to around 155 against the dollar, its strongest level since early May. So I think trader needs to stay on alert. Its coordinated intervention could come at any time during either Tokyo or New York trading hours, making it much riskier to bet against the yen.
All right, Bloomberg's Erica Yokoyama keeping an eye out on those yen moves. Now, turning back to the regional story, oil is falling after U.S. President Donald Trump calls off planned attacks on Iran and says renewed talks would begin on Monday. Investors are now weighing whether an agreement can be made for the flow of traffic through the Strait of Hormuz to return to normal. So let's get more from Bloomberg oil trading reporter Nicholas Lua. Nicholas, good to have you on this morning. We are seeing yet another breakthrough. We've been here before over the past 5 months, but when it comes to oil and oil movements in particular, do you think we could see oil drop further?
I think what's clear is that nothing is clear, Abir, and I think that's why we're not seeing oil continue to slide, right? A lot of why we saw it come off this morning, as much as 7% on Brent, was a big part because nothing escalated, right? And then Trump had his whole, we were supposed to hit them the hardest that's been hit since World War II, and, now that's not going to happen, now we're going to have talks. So I think that's certainly that's governing a lot of the drop. But I think we have to remember that the situation in Hormuz is still escalated. It's still not de-escalated completely, right? Iran continues to talk about managing the strait with Oman, like they've had final talks on that, as we heard from the foreign minister. And I think in the comments they said that the reopening of the straits had nothing at all to do with what was going on. And they talked about how the US attacks are what's caused the strait to close, right? So in terms of resumed flows, I think there's a lot that remains unclear.
And so, Nicholas, when it comes to the Strait of Hormuz, the movement there, what is the latest on those shipping lines? What are we seeing there?
So I will take your point. There has been some signs that flows are increasing, although we're nowhere near where they were before the war, right? Let's not forget that before the war, a fifth of the world's oil and gas flows flowed through Hormuz. Now we're seeing, of course, some of the shuttle flows starting to pick up. So early in the war, that was one of the workarounds. So ships would carry oil and gas out of Hormuz. They sort of come out and they do ship-to-ship transfers in and around Oman. And as recently as last Friday, when Bloomberg News checked, we saw more shuttle tankers doing those ship-to-ship transfers. So I think that's a hopeful sign. But let's not forget, of course, that this still remains a very unclear situation. The UK MTO mentioned early this morning that a ship off Oman had heard an explosion, like within 20 nautical miles. And I think some of the oil dropped this morning paired as a result of that, right? So I would say, as with all things Trump, we're a long way from clarity.
All right, Nicholas Lua, keeping an eye on the movement or the lack thereof in the Strait of Hormuz. Now, coming up, we will take a look at the impact of the war in the Middle East and what it's having on C-suite recruitment with Weam Kamel, partner and Abu Dhabi operations head at Alchemy Research. That is next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. The war on Iran and talent shortages have made C-suite candidates much harder to recruit and retain in the Middle East. That's according to Alchemy Search. As a result of that, candidates have stronger bargaining power while employers are shifting to hire locally first. Joining us now to unpack all of this is Weam Kamel, partner and Abu Dhabi operations head for Alchemy Search. Weam, very good to have you on with us.
Thank you for having me,
Abir. In the intro, we were just talking about the impact that the war was having on recruitment. So just in a nutshell, how much longer is it taking to hire C-suite compared to the past 12, 18 months?
Yeah, I think recruitment is changing, and it's changing fast here in the Middle East. What we have seen is that compared to 12 months ago, you could have just posted a job and gotten thousands of applications and maybe had 10 people in your process, whereas now that number is probably down to 5. We're seeing that companies are taking probably a little bit more time to find the right talent that they're looking for. But that's what we're here to do, to make that process a lot smoother for companies. So has there been a change? Yes, I think there's been a change. Has it been as bad as we thought it was going to be when the conflict started? Probably not so much.
Okay, that's positive news. Yeah. I was taking a look at some of the notes that you have laid out. You said for the first time in a long time, there are more jobs than candidates in the market. I don't remember the last time I heard that happening in Dubai. And then you also said 15 to 20% uplift is no longer enough to make someone switch jobs. Those are fascinating kind of remarks that we're seeing. Is this the first time we're seeing something like this happening in the region?
The first time in a very, very, very long time, right? And we've got more candidates we've got more jobs than candidates that fit these particular roles. There are still plenty of people that are on the market, but with niche positions, we're finding it quite difficult to find the right talent. I don't think it's anymore enough to offer candidates that you're looking for, especially at the senior end, 15 to 20% uplift. There needs to be a lot more compelling story. I think it's a great time right now for businesses to do their salary reviews, look at their benefits, see what else they can offer, because in times of uncertainty, if you take care of your people, they will remain, they will stay in the business, right? And also, you will be able to attract top-tier talent. So there needs to be a little bit more than just that uplift. And we're seeing that things like offering work from home for 1 or 2 days or over the summer can go a long way. So
this is music to every employee's ears. Higher salaries, work from home. But then I also want to talk about geographies. We've seen interest from several geographies over the past few years, especially in a country like the United Arab Emirates. Are you seeing a slowdown in demand or in interest from specific geographies? Yeah,
I mean, we are seeing generally a decline in the supply of candidates, and that applies to every single country. Okay. But I think predominantly we are seeing it from the West, but it really depends. I mean, what the candidate connection to the region is, as in, do they have colleagues that work here, for example, or friends and family that live and work in the region? Because if they have that connection, they're probably still considering it. The good thing is everybody knows somebody that is working in the region, right? So the interest is still there, but it's slowing down a little bit. But we also see that internally in the region and in the country as well. It's a lot harder to move talent around because in times of uncertainty, people want to stay put.
So are you seeing any candidates, whether externally or from within the region, pulling out at the contract stage or at the visa stage, citing geopolitical instability?
Yeah, those numbers are definitely a lot higher than they were 12 months ago, of rejected offers, counter offers. But I think this means that you need to keep an eye on your process whenever you're hiring C-suite talent, whether that means through your recruiter that can control the process or your internal team that needs to ask the difficult questions throughout the entire process. Because the last thing you want is, as an employer, to go through a 2 to 3 months process and then your senior hire is no longer joining, right? But it's always been difficult to relocate. Relocation is not a very easy thing. It's a very complex thing, especially if you have family. So I think it's quite important to keep an eye just to mitigate that risk. And I think the region has worked really hard to create this safe haven full of opportunity. And that's not just going to disappear just like that. I don't think so.
I spent a lot of time reporting on economic and regional dynamics, and I remember a couple of years ago, my colleagues and I wrote a story about interest of people coming to the United Arab Emirates, particularly from the UK. So to go back to that geographies question, are you seeing lower demand from European countries, the UK in particular, the US, for example? What takes the biggest piece of the pie when it comes to lower interest?
Yeah, I think the relations between the UK and UAE has always been very strong. So the move of talent has always been quite open between these two countries. The workforce has a very big number of UK citizens moving here every single year. So we have seen that decline a little bit. Us as recruiters, we need to spend a little bit more time, effort, energy, investment to try to really lock in that talent to keep it coming here. I posted a role, I think, a couple of months after the conflict, a couple of weeks after the conflict, and I remember getting applications from the Netherlands and Switzerland. So that interest still remains. It's just we need to work a little bit harder, I think, to find that talent and bring it over to the Middle East.
Okay, so negative story, but with many caveats that could be seen as positive.
Definitely.
Thank you so much for being with us this morning.
Having
Kamel, partner and Abu Dhabi operations head for Alchemy Search. For more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. Now, coming up, from soaring energy profits to the multi-billion-dollar battle over weight loss drugs, European earnings season ramps up. We'll have details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. European earnings season continues this week. Heavyweights across energy, aviation, and banking are stepping into the spotlight. A lot to focus on Novo Nordisk, the Danish pharma giant that is banking on its Wegovy pill to lift its outlook. This is after intense competition from Eli Lilly. For more, we're now joined by Bloomberg's Chloe Melly. Chloe, yet another busy week for you. What are the highlights you're expecting this week?
Yes, good morning, Eyre. We are seeing a very busy week ahead of us. And so because we're now a couple of weeks into the earnings season, a lot of those themes that have already arisen, that's going to be also very much in focus this week. We've got this AI theme. We've got Siemens Energy with the gas turbines, and that is going to be used in data centers. So any order momentum there is going to be really important to kind of gauge the sustainability of AI demand. Same for the chip maker Infineon. That's also going to be in focus around this AI trade. We've got, of course, oil. That's still very much in focus. We've got BP and Aramco reporting later this week. We had those blowout results from Shell and Eni, and so they should have also benefited from this disruption to oil flows. So that's still very much in focus as well. And then we've got some consumer names as well, like Heineken and Diageo, which owns Guinness. And there we could be watching out for maybe a World Cup boost. However, we are also expecting some weakness in the US market for those consumer names. We had quite mixed reports so far this season from those consumer companies. So we'll be watching out for any impact there, especially from this sort of weaker consumer confidence as well. So a lot of those themes over the last couple of weeks really coming back this week and being in focus.
And Chloe, particularly on Novo Nordisk, what are you expecting to come out of that?
Yeah, so for Novo, the assumption going into this quarter is that we could be seeing a bit of a rebound, and that a lot of that would have to do with the weight loss pill, which has seen quite a lot of success and a stronger uptake than the rival drug from Eli Lilly. And so we could see potentially a rebound. Some analysts are expecting potentially a guidance raise coming from that. But we are also just watching just generally for the outlook, because we did have last week as well a trial failure for a heart disease drug. So there's also a bit of a setback there. So we have the positive from that weight loss pill and the potential negative coming from this recent trial failure. So we're going to be holding both of those things in mind as we go into this report this week.
All right, Bloomberg's Chloe Melly with the latest on the upcoming earnings this week. Now, for a look at some of the other stories that we're following, the impact of extreme heat is being felt across Europe. Water levels in the Danube have fallen to a record low, forcing Hungary's sole nuclear power plant to shut down. New Prime Minister Peter Magyar said one of the two remaining reactors still operating at the PAC's plant was shut down early on Sunday, with the final one powering down later in the day. And South Korea has issued heat wave warnings after the city of Yangsan hit 42.5 degrees Celsius. That is the highest temperature recording since 1904. Yonhap says senior officials are being deployed to affected regions to assess local responses and provide additional support where needed. And pressure is mounting on FIFA President Gianni Infantino after plans to privatize the federation's commercial arm fell apart. UEFA, Europe's football governing body, says it has lost confidence in FIFA's leadership. Meanwhile, CONCACAF, which represents North and Central American nations as well as the Caribbean, is calling for accountability after a leadership that, quote, stopped putting football first. A quick look at markets before we head out. Equity futures all in the green. Treasury yields are dropping. And oil prices are seeing massive drops this morning after President Trump touted talks expected later today. That is it for Horizons Middle East and Africa today. Stay around with us for Daybreak Europe. This is Bloomberg.